Hi, this is Acme with the Bulletin Board Heroes here on Share Talk for Thursday, the 25th of March, and rather more villains than heroes today as far as the small caps are concerned. Starting off with Braveheart, though, here we've had a nice break through 80 pence, which was the level that we wanted to break. Really, that was a neckline resistance that we've had for most of the month, and an end-of-day close above that should be relatively straightforward in terms of pushing the shares towards resistance on the way down in February, towards the £1 to £1.10 area, which all of a sudden doesn't seem to be too far away. Stop loss, I suppose, either an end of day close back below 80 pence, or if you're able to handle it, back below the 20-day moving average and today's support at 68 pence. Moving along to a stock which has proper solid technical and charting credentials at the moment. Here we've got Coral Products, and the reason for including this today on a rather dull day for the market is that if you look back, you can see that we had a gap higher in December, another gap higher later in that month, and the gap was never filled, never even close to being filled. So we've got a sideways consolidation, which is normally seen, or a step consolidation, which is normally seen early in the strongest of situations, breaking near-term 12p resistance and closing above it today or tomorrow at the end of the week. And we should be on our way towards a 20 pence target as soon as the end of next month, which is the top of a rising October trend channel. So let's see if the charting works on that particular situation. Another stock which is merited in terms of its gap action has been Cambria Africa. I've looked at this a few times before. Obviously, we've had that pullback from the early March resistance, but we've still maintained higher support points above the gap that the shares left last month, so that was through the 0.3 pence area, and at least while we're above the recent support at 0.35 and the 50-day moving average and the floor of the rising trend channel from November, looking to retest the best levels of this month by the end of April. So that one looking pretty well set up while that gap remains unfilled. On to market maker's favorite, according to some sources that I have, fusion antibodies. Been a long time trying to get through the sort of £1 to £1.50 zone. A bit of jiggery-pokery now, finding old resistance as new support, which it looks as though we've done with today's price action. Final dip below £1.50 today and yesterday, and pushing through the March high at £1.65, which given current market conditions is quite a plus. Should be on its way towards retesting £2 to £2.50 next month, but the big target here as high as £3 at the top of the rising trend channel from back in February last year, and that's a 2 to 3 month time frame target. Only really back below, I suppose, £1.40 on a mid-price basis, really questioning the breakout for the shares, which has been a long time coming, and looks as though, as I said, it's finally on its way, with all the near-term moving averages also rising at the moment. Jubilee Metals, a stock which I was very keen on, have been keen on most of the year, not surprisingly given the way that the shares have performed. Still within this rising trend channel from November. Support for the stock either at old resistance from January at 14 pence, or ideally not even going back below 15 pence, which is the floor of the rising trend channel, and above 15 looking for 20, hopefully by the end of next month. A bit of a delay there, but still looks pretty strong, especially in the wake of today's news from the company. Stock which is probably more of the type that we'd like to see in the Bulletin Board Heroes today, Carelian Diamonds, and here we've had a gap through resistance, gap through 6.5 pence, so the gap through the 50-day moving average as well earlier today. As long as we close above 6.5 pence, which it looks as though we will, we're heading towards hopefully the top of a rising trend channel from back in, it's like back in 2019, the halcyon days, pre-pandemic. So 10 pence ideally by the end of next month, and possibly much more given the setup that we've got there. Nice bear trap below 4 pence beginning of this month, and that gap through resistance pretty strong. In fact, there's a gap there from last July as well, so pretty strong setup. More unfilled gaps you can see on a chart. The better the news is, or the prospects are, for a stock maybe up to 14 pence on a 2 to 3 month view for Carelian. Moving along to a stock which is chosen on for a couple of reasons. One, that it's had a premium placing and the shares have actually gapped higher. Normally when you see a premium placing and it goes well, that's good news. Gap higher is normally good news as well. And a gap higher off support, also a plus point here. Top of the channel there from September as high as £2.25, and hopefully we'll see that by the end of next month. More news today from Tirupati Graphite, so I thought I'd mention the stock again, just hanging near the £1 level. Obviously the shares have doubled since they came to market, more than doubled. Still got this rising trend channel, floor of the channel currently around the 95 pence level, and at least while we're above 95 pence. Looking for the top of the December trend channel there, as high as £1.30 over the next 2 to 3 months, probably. If you're looking for a momentum signal, I think it looks as though a clearance of 105 on an end of day or a weekly close basis should be enough to do the trick for Tirupati over the near term. Good to see Bessarion back, obviously a stock that divides the bulls and the bears quite strongly, but here we've had, I suppose it's a narrow bear trap low from below the 34 pence low of December. I think the low this month, actually around the same level, so it looks like a double bottom actually off the December support. But either way, we've broken a February resistance line. We've broken the 20-day moving average at 39 pence. And a decent end of day close above 39 pence, and that broken line should be enough to take the shares on a little run, ideally up to last month's resistance around 55 pence by the end of April. Big target here, assuming that finally the shares are rehabilitated, would be a retest of January resistance at 80 pence, maybe going into May or June. But let's go for the upper 50 or the low 50s rather in the interim. I think that would be a fair thing to do. Fun stock of the day, and one which is looking really quite exciting on a technical and even a fundamental basis, is Webis. I think I've described the price action of late. Earlier in the week, we had a breakthrough resistance at 3.5 pence, came back to test that as support at the beginning of the week, and powered higher since. Initial target here, as promised before, up to 7 pence, maybe by the end of next month, the way things are going, maybe even by the end of this month, but 7 pence by the end of April. A bigger target on a 2 to 3 month view now, as high as 12 pence, maybe for May or June on Webis. But all of that while we hold above 3.5 pence. Ideally, there's a decent weekly close tomorrow above 4.7 pence, and that would be the trigger for an acceleration of the recent gains. That's it from me today. More updates tomorrow.